Summary today. I was in the chat room for the first 2.5 hours today, and the day began as a small pullback bull trend that was not very strong. And I said if the bull trend was going to last all day, the bulls probably needed at least 2 clear gaps. And a gap is the space between 2 prices. We had a breakout here, consecutive bull bars closing near their highs. One of the bodies completely above the moving average. So that's probably going to lead to a swing up. We had disappointing follow through, and then we had some bear bars and a reversal up here. Whenever you see a pullback that reverses back up, resumes back up, I always look to the left to see what it's testing. And it was testing the high of this outside up bar, this breakout bar. On the open, we had a bull bar with a big tail on top, and we were far below the moving average. And I said that we had a small gap. The market has been sideways for 5 days, and it's unlikely that we're going to go down much. I said we probably were going to go above yesterday's low, go above this breakout point. We gap down below it, above the 60-minute moving average, and at least a little bit above the moving average on the 5-minute chart, the 20-bar exponential moving average, and we did. And the bears had 3 attempts down. We reversed down here, we reversed down here, we reversed down here. Did not trigger. It triggered over here. I said the problem with shorting this, besides the bar not being a good-looking bear bar, small bear body, is that from bar 11 to bar 22, 12 bars, the low of every bar was at or above the low of the prior bar. So it's a micro channel. And if you have a micro channel that lasts 10 or more bars, the bulls are typically going to buy the first reversal down. They've been willing to buy at or above the low of every bar for 12 bars. So they will be very happy to finally be able to buy at the low and below the low. So I said this was a minor reversal. Turned out it was a breakout test of this. You can call it a higher or low major trend reversal. But the buy signal bar here is a bear bar, not good. We have a big outside up bar here. Pretty good. I think we're always in long. I think we're going to go higher. I'm not sure how much higher we'll go. Yesterday's low was here. We opened below it. I said we go back above it. And I said, I thought yesterday's high was too far for the market to get there, given that we're not getting clear big gaps in the small pullback bull trend. On the open, we had a bull bar, but a big tail, so nobody wants to buy above it. And then the bears had a bear bar closing near its low. A very good looking bear bar, a good looking sell signal bar, but bad context. Do you really want to be selling that far below the average price? The moving average is one measure of average. Do you want to sell that far below the average price when the bar before has a bull body? No, so nobody wanted to sell below it. In fact, even though it's a bear bar closing near its low, more traders bought at the low of the bar than sold. The bulls tried to get a small double bottom, 1 and 3, and it has a bull body, but it has a big tail. And we have big tails on these 2 bars and a bear bar. This is a limit order type of market, not a good stop entry market. I would not sell below 2. I would not buy above 3. We went sideways for a number of bars in a tight range. These 4 bars have identical lows. So if you have a tight trading range with 4 or more bars having identical lows, I call it a ledge. 80% of the time, you're going to go below the ledge and pull back above the bottom of the ledge within about 100 bars. But after we had 7 and 8, I thought we were not going to come down there today. We might get there tomorrow, but I don't think we'll get there today. I said 80% chance we'll dip below it and pull back above it. 20% chance we will not within 100 bars. Obviously, we're going to get down here at some point. It could be 2 days from now, it could be 2 weeks from now, but we will get below that at some point. For stop entry traders, you don't do anything here. For limit order traders, the bars are so small that it's difficult to make money with limit orders. selling the close of a bull bar, buying the close of a bear bar, buying below a bear bar. So for the first half hour or so, nobody made any money. In addition to a ledge, this bar is outside of that. Its high is at or above the high of that bar. Its low is at or below the low of this bar. And that's true of this as well. So we have an OO, and then we have a third outside bar here. So we have an OOO, which is breakout mode. And we broke above it. I said the breakout bar was good. It had a decent sized body. It closed near its high. It closed above the high of the prior bar. It closed above the high of the day. So this looks like a possible start of a swing. Also, we have consecutive bull bars with at least one being big and closing near its high. And that is a buy the close type bar. You either buy the market on the close of the bar, you buy on a stop above the high of the bar, and you hold for a swing. You put a stop below. I said that because the bars were small, I said it was not as high a probability buy as traders would normally like. But I said if you buy it, you trade small, 20% of your normal position. And all the way up, the bears kept getting reversals, but they were not getting follow through. So it never clearly became always in short, at least not for the first several hours. And I said every one of the reversal attempts, traders were buying. You can see we have a big bear bar closing near its low here, but the next bar did not go below the low. Why? Because we were still long from this close and from above the high of that bar. So traders bought the close of the big bear bar. It's also a test of the top of this tight trading range. We have another outside bar here, a bull follow through bar here. The follow through is not big, but it's bull follow through. And then we had this. We have a pair of bull bars with decent sized bodies, and the second one closing on its high, and the body of the second one completely above the 20 bar exponential moving average. That usually will lead to some kind of a swing. We had terrible follow through. We had an II here, consecutive inside bars, but tail, not all that good to buy. We have a double top here, did not trigger. We have a triple top here, and it triggered. It went below the low of that bar. That bar had a bare body. But as I said, it was also 12 consecutive bull bar or 12 consecutive bars in a micro channel, every low at or above the low of the prior bar. So chances are traders are going to buy that low, and I would not sell. We broke strongly below the moving average here, closed near the low, but the bears need at least one more bar. They need the opposite of this or the opposite of that to make traders willing to believe a bear trend is underway. And until we get that, bulls will keep buying every reversal down, and they'll keep buying everything bearish. We have a body gap. These bodies do not overlap. Here's the breakout point, and it's not overlapping the bodies of the breakout point. And that's good for the bulls, but they need more. They usually, if a small pullback bull trend is going to last all day, normally you'll get an actual gap. For example, here's a gap, this low and that high. There's actually a space between the two. It did not lead to a trend, but that's what I mean by an actual gap. Here's another gap. We have another ledge, a tight trading range with 4 or more bars having identical highs. 80% of the time, we're going to go above it and pull back below it within the next 100 bars. And we did. And we came back and tested it later in the day. And we tried to go up and we pulled back here. And look at the low of this bar. There's an actual gap between the low of that bar and the top of the ledge. And that could lead to a measured move up. I want to say one other thing about this pair of bull bars here. It's not very strong, but it's a reasonable swing buy. And 90% of days have at least one swing trade that is reasonable with a decent buy signal bar or a decent sell signal bar. And the swing will last for an hour or two and reach about 40% of an average day's range. The average range lately has been about 50 points. So 40% of 50 points is 20 points. 20 points is 80 ticks. So 90% of days will have at least one swing trade from a reasonable buy or sell setup that will go enough for traders to make 80 points. If you buy one tick above the high of this buy signal bar, this is when it became clearly always in a long and a buy the close market. If you buy one tick above it, for you to make 80 ticks and you place a limit order 80 ticks above your entry, it has to go one more tick. So it has to go, you buy one tick above the buy signal bar, it has to go 80 ticks up, and that's where your order is. And it usually has to go one more tick to fill your order, and that's up here. So this is one of those trades I call a Walmart trade. If you're a person who has a hard time staying in a trade, or if you get out, you don't get back in, you simply buy, put a stop below the low. In this case, I'd put the stop below that, place an order, OCO order cancel order at 20 points above up there, go to Walmart and come back in a couple of hours and see how you do. We trended up. This is good for the bulls. This is bad for the bulls, but it's not good for the bears. So we're still bullish. And we worked higher. And every time the bears did something bearish, big bear body, a bear bar, another big bear body, a bear reversal, possible ledge, another reversal, maybe a wedge, 1, 2, and 3, maybe a wedge, 1, 2, and 3. Every time the bears did something bearish, bulls bought it. So the pullbacks remain small. Even though this is sideways for 10 bars or so, the pullback from the high is actually small. So this is a bull trend where the pullbacks are small. I call that a small pullback on a bull trend, which is a strong trend, even though it looks weak here. My concern is here we are 3 hours into the day and the market has not even gone 20 points. So I think, and also we do not have clear gaps. And I said, chances are this is not going to last all day. We should get a swing sideways to down for about a couple of hours. And we did, but it occurred later in the day than I thought. It occurred at bar 55. We had a couple hours of sideways to down. 2 hours is 24 bars. And from 55 to 81, that's a little bit more than 2 hours. The small pullback bull trend continued. And anything bearish, the bulls bought. If you want to enter with stops, one of the frustrating things is when you enter with a stop, it did not quickly go up enough for a scalp, 5 points. So if you bought above 29 and you were disappointed by the follow through here, you may decide to scalp, but it took a whole bunch of bars before it went up enough for even a 5-point scalp. The simplest way to trade a small pullback bull trend is you wait for a pullback and you buy with a stop above the high of the prior bar. So you buy one tick above that, or one tick above that, or above this, or above that, or above that, above this. And the easiest way to control risk is to get out below a bear bar closing near its low. So if you were long through here, it's reasonable to get out here, even though it's minor. But if you do get out and you want to be always in the market or in the market most of the time, you wait for a bull bar closing near its high and you buy again above that or above that. If you get out below this, you buy above that. If you get out below this, you buy above that. But it's normally, if you do that, you can make at least a scalp on every buy. Scalp is 5 points. Swing is 4 times bigger than a scalp. But say, because the bars are small and the range is small, it was hard to do it. We broke above the Globex high up here. This is the Globex high. We broke above it and traders took profits. And then look at this. Okay. We had a very big bear bar, a dramatic bear bar, a surprisingly big bear bar. It's probably going to have follow through, like a second leg down. And we did have a second leg down. We rallied and we got a lower high major trend reversal, a wedge rally. If you sell on a stop below that, you get filled here. If you do it, it's probably better to put your protective stop above there and hope that we fall for a measured move down. Here's the top, there's the bottom, here's a measured move. We did not get that far down, but you would have made at least a few points. I would not be quick to get out. You can say, well, Al, isn't the bull trend resuming? We're testing the moving average, reversing up. Yeah, you could take the buys, okay? But this is so unusual. A very big bear bar closing on its low. We broke above the top of the bull channel and reversed. The 20-point bulls are so happy that they got to 20 points that they sold. Chances are this is going to remain the high of the day. So yeah, we may go up, but we should get a second leg down after this. So at this point, I'm only looking to sell. I would not take those buys. I'm looking to sell and put a stop up there. There are several different ways you could sell. You could sell on a stop below the low of the bar, put a stop above it, or wait for other bear bars closing near the lows to sell below that. Or this is even better. We have 3 legs up, 1, 2, 3, and a bear bar closing near its low, sell below that, or a second entry, sell below that. I would not get out above this. I would get out maybe above a bull bar, maybe above that, or above the top of the leg up there. I think if you're short for any of these things, I would just put the stop above this. This is a good candidate for the high of the day. The bull trend, even though it persisted for 70 bars or 55 bars, it just does not look all that strong. It did not even make 1% of an average day's range. And it did not even make 1% of the price of the market. The market is 4,100. 1% is 41 points. We did not even make 41 points, and we did not get those gaps. So I would not buy again. I would be expecting at least a couple legs either sideways or down, and I'd rather sell rallies at this point. And I did. So you could sell below that, you could sell below that, sell below that, sell below this, and see what you get. When we get this reversal up here, if you're short, I would get out above that. There's a gap between the low of this bar and the ledge, and it's a decent sized bull bar, and we have a tail here, and we're right at the 60-minute moving average. So, and the bears are not getting consecutive big bear bars closing near their lows. We have consecutive bear bars, both bodies below the moving average, but the second one has a big tail. That's different from what we had over here. We had 2 closes above the moving average and a bull bar closing near its high. That's good. We have 2 bars closing below the moving average, the second one with a big body, but a big tail below. That reduces the chances that we're going to go down very much, plus we're running out of time. So if you're short, you either exit at the market or you exit as this is turning up, micro double bottom, or you exit above the high of this bar. So that's it. Let me just see if I covered everything. The ledge, we pulled back, we broke above it, we pulled back below it. We almost pulled back below it a second time. And then we have this other ledge. And I think the bears have a decent chance of getting below it sometime in the next few days. I don't know. If you've been paying any attention to what I've been saying over the past, since the October low, I've been saying that this is the daily chart. I think we have to get up to that August high. The bears are hoping that this is a head and shoulders top, and it is left shoulder, head, and right shoulder. But this was so strong, and the bulls who bought up here never had a chance to get out once they were disappointed by these bear bars. And when that happens, the bulls usually look for another decent opportunity to buy again, like here. 60% of the time, it'll go to the midpoint of their 2 buys, between the worst buy up here and the buy here. We have already been to the midpoint. The bulls who bought here could then get out break even if they bought more here. But 80% of the time you can get out break even. 60% of the time it's going to get all the way back up there. So I still think we're going all the way back up here before we go below that October low. And if you've been following me, you know that I think we're going below the October low. It's not like 90% certain. Here's a weekly chart. We were in a bull trend and we accelerated up above 4,000. We had a gap on the daily chart, the weekly chart, and the monthly chart. And so that's clearly an important price. And for 16 months now, we've been oscillating around 4,000, this green line. So again, clearly important. This is important. We have 2 important prices. They often lead to a third important price. So 1, 2, and 3, a measured move down from the all-time high to 4,000. And I think we're going there. You can see it's around 31, 3,200. I think that's where the market is headed sometime this year. But I think we have to get up here first. And if we get up there and reverse down, it'll be a double top. Here's the neckline. I don't think we'll fall for a measured move, which would be all the way down here. But I do think we're going down here. I think this is where we're headed later this year. I don't know if it'll be October. I don't know. But I think that's where we're headed. This is extremely climactic. I think this is going to turn out to be the first leg down. This is the pullback from the first leg down. And then I think we're going to get a second leg down. And what are the chances that the market is going to go far above the all-time high? I think small, maybe 20%. I think we have to go more sideways to down. We may go a little bit above 5,000 before we go down here, but I think we're going down here. And I think right now it's more likely we're going down here before we go to a new high. So I think whatever rally we get here will be a pullback from this first leg down. And I think we have a second leg down. And if we do fall below the October low, which I believe we will, I don't know what the percentage chance is, 55%, maybe even 60%. If we do fall below there, I think we'll fall below it very quickly. For the market to fall very quickly, there has to be some news event that corresponds to it. And obviously, Putin may drop some tactical nuclear weapons in Ukraine. We could have a bunch of bank failures, maybe 3 or 4 regional banks going under, something like that, or a mutual fund failing, some big event. And that would make the breakout below this be very rapid. And I think we're going to get this kind of a breakout. Here we had the pandemic. So I think, we'll get 3 or 4 big bars down to here. And that will be the end of the leg down. Will we go up to a new high? I don't know. I think if we do come down here, we'll probably be sideways for at least several more years. So if we go up, there'll be sellers above. If we go back down, there'll be buyers down here. So I think that this is a trading range that's going to last at least a few more years, even if we make a new high and a new low in the meantime. Will we get below here? This low, the pandemic low, is 56% below that. And how often do you see 57% pullbacks from the high? Rare. It's every several decades. So I don't think we're ever going to go below the pandemic low. Even if we come down here, I think the pandemic low, maybe there's a 20% chance we'll get here. It's 56% down from here. And if over the next few years we go up here, then this becomes 60% or 70% down from the high. And that would make it even more unlikely that we'll ever get there. So sideways for 5 days, the bears are trying to get a reversal down from a head and shoulders top. And they might. We have a fairly tight channel. And we're at the end of a very bullish window. March and April is the most bullish pair of months of the year. And trading ranges, they typically disappoint bulls and bears. The bulls might get disappointed by this rally. In other words, we may sell off from a head and shoulders top. If we do break below here, then we'll probably quickly go below the October low. I still think we may go up to the August high. I think there's at least a 50% chance we're going to get up to this area and then begin the sell-off. All right, that's all that I had to say. I hope everybody found something useful from this. Thank you.